We're also going to be talking to the management of Tata Capital on their outlook as well. Whether they're seeing an ease in funding costs, etc. So let's actually welcome in Mr. Sabharwal, who's joining us this morning. Mr. Sabharwal, good to have you with us. Let's first talk just, purely about the outlook going forward in terms of growth. How insulated are you from some of the issues that we're currently seeing in the sector?
I think growth to an extent has been muted in the year up till now, but we are pretty positive about the festive season because the basics as far as India's demographics are concerned still remain strong. We are pretty positive, because a lot of offers are being put forward by all manufacturers at this point of time, and all of this does spell out a good set of next 4 months.
So, how's the preparation for festive season panning out? Are you assessing the demand environment right now, the credit growth at ground level? How's it looking to you currently?
I think so. A couple of things are relevant. First of all, liabilities. I think so. RBI has worked on ensuring that there is sufficient liquidity in the market. Today, whether it's bank funding, whether it's NCDs, whether it's ECPs, I think we are all looking at a much better liquidity situation and are sitting on cash. We are really looking forward to the festive season because it's expected to bring in more auto demand, more demand for consumer durables, more demand for two-wheelers, also for affordable housing, which is a segment which has been doing well. So a combination of all these factors, I feel will lead to a situation where we could see credit growing at somewhere between 15 to 20% over the next 4 months or so.
Right. Home retail loans and the kind of growth that one has seen in tier 2 and 3 cities has been showing higher growth. What, according to you, is aiding this kind of a move, this kind of a growth, and what are the trends that you're yourself, witnessing when it comes to these pockets of the economy?
See, if you look at the real estate segment, we all know commercial segment has been doing well, and that helps create jobs because if more spaces get leased out, more jobs get created, there are more people wanting to buy homes. The second thing is, as far as every city, there is a sweet spot as far as the right size of home loan, home property is concerned. If there is a good amount of supply in that segment, then home loan sales are happening, and that's what we are seeing in the affordable housing segment. The other thing which has helped is the PMAY scheme, the government giving tax benefits have increased, but also benefits on interest rates. All that makes home loan a little more affordable, and with NHB also bringing in more liquidity to the market, that is what is helping affordable housing. So a combination of more jobs getting created, more commercial space getting utilized, and also interest rates being low and supply being in the right segment is all helping the market grow as far as affordable housing is concerned.
Right. Wanted to understand, about the monetary policy transmission as well, because it's happening by the banks. Are you also seeing the funding cost environment easing, and are you yourself passing on the benefits to the customers?
Absolutely. We are clearly seeing interest rates, especially in market instruments, coming down. If you look at those CP forms a very small proportion of our funding, but CP interest rates are down. If you look at the interest rates in the NCD market, they are down. We had done a public, NCD issuance. The rates at which we raised the money at this point of time compared to what we had raised in September was a good 60 to 75 basis points lower. When we look at the bank rates, banks are passing on the benefits of lower interest rates. However, we always wish that the transmission would be even better, but clearly, as far as the incremental borrowing is concerned, it's coming at a lower interest rate. And since it is coming at a lower interest rates, it also enables us to offer loans at a lower interest rates to our customers.
Is there a case for margins to expand from here on?
I think, margins had contracted when suddenly interest rates went up in the September to December quarter of last year. Post that, margins have adjusted. I believe that margins will remain steady during this period of time. Festive season usually leads to better offers to customers. So I would say margins would remain steady or move in the minus 5 to 10% range.
And how well capitalized are you for growth currently? What kind of requirements would you look at for the following fiscal?
So as far as we're concerned, we are not a listed entity. Our our capital is put in by our parent, which is Tata Sons, and they continue to be in discussions with us, looking at the portfolio and the opportunity. We always run at a capital adequacy which is 200 to 300 basis points higher than what is regulatorily required, and we will continue to do so. I think so. Capital wise, we are well placed. What we are looking at is where are the right opportunities where we can lend at sufficient margins, and more importantly, ensuring that our book quality remains good.
Any repercussions of the subsequent default that we've seen by Tata Capital? Are you seeing any impact on the sector?
I think any default by any entity makes news, and more importantly creates some bit of anxiety among all lenders. The good part is that most of the challenge what has been seen for the entity is being restricted to certain segments, which is the real estate segment. So people who are overexposed to illiquid assets is where the challenge has been coming in. So if there are a set of companies which are not overexposed to illiquid segments, this challenge is lesser. I think as far as lenders are concerned, they are conscious of this. In fact, a lot of lenders today look at the nature of portfolio which you are originating before deciding to give loans, and if they are comfortable, then it's fine. So I feel this will remain, this single incident will remain a secluded incident. It will not impact the whole market, but definitely people who are overexposed to certain segments may face certain challenges.
Okay. There have been some remotes that possibly promoters are looking to sell a stake. If you could clarify on that in terms of how much one would be willing to offload?
There is that news is completely incorrect. Promoters feel very strongly about the financial services business, and they continue to almost hold all of the stake at Tata Capital.
For joining us, Rajiv, and clarifying on that. Do have a good day going ahead.